Hey everyone, and welcome back to the channel. Today, we're tackling a huge topic, money. Not just how to make it, but who gets to create it, and what that means for our future. We're going on a journey from the system we have now to a radical new vision for a fair financial world. Every day, we interact with money. We earn it, spend it, save it. But how many of us truly understand the hidden architecture beneath our global financial system? At its core is fractional reserve banking, a system that sounds complex but is surprisingly simple. Banks keep only a fraction of your deposit, lending out the rest. This unique mechanism allows them to effectively create money out of thin air with every new loan, multiplying the total money supply in our economy. For decades, the private commercial bank has been portrayed as a vital engine of growth. They fuel our mortgages, empower businesses, and drive consumption. This power to extend credit has undeniably been instrumental in the vast economic expansion we've witnessed over the last century. But beneath this facade of progress lies a ticking time bomb. The inherent flaws of fractional reserve banking create profound instability and perpetuate inequality. So, how does money actually come into being? Most of us think it's the government or the central bank printing it, but that's only a tiny part of the story. The vast majority of the money in our economy is actually created out of thin air by private commercial banks every time they issue a loan. This is called the fractional reserve system. Let's break that down. When you go to a bank for a mortgage, the bank doesn't just lend you money from someone else's savings. Instead, they simply type a new number into your account, poof, new money exists. They are required to hold only a small fraction of their deposits in reserve. This system gives immense power to private banks. They decide who gets credit and for what purpose, and their main driver is profit, not public good. This profit-driven model can lead to risky speculation, financial bubbles, and devastating crashes like the one we saw in 2008. The profits are privatized, but when it all goes wrong, the losses are socialized, meaning taxpayers bail them out. It's a system that has historically funneled wealth upwards and left the rest of us vulnerable. But what if there was a better way? What if we could reclaim this power for the people? This brings us to the next big evolution in money, central bank digital currencies, or CBDCs. Many countries are already exploring this. A CBDC is a digital version of a country's official currency issued directly by the central bank. Think of it as a digital dollar or a digital euro that you can hold in a digital wallet, just like cash, but with the security and efficiency of modern technology. Initially, a CBDC could exist alongside our current system. You'd have an account directly with the central bank, which is the safest financial institution there is. This would offer a secure alternative to private bank deposits, reducing power and making the financial system more stable. But this is just the first step. The real transformative potential of CBDCs lies in what we can build on top of them. Now, let's explore a truly revolutionary idea. Let's call it the Socialist Modality. What if we used the CBDC framework to fundamentally change who controls money creation and for what purpose? In this model, the power to create money is returned to the public where it belongs. The central bank would have exclusive control over money creation, ending the private bank monopoly. Instead of profit-seeking banks, we would have public credit institutions, or PCIs. These institutions wouldn't be chasing shareholder returns. Their mission would be to allocate credit based on the public interest. Imagine PCI is channeling funds directly into projects that benefit all of us: affordable housing to end homelessness, massive investments in green energy to combat climate change, funding for public infrastructure, education, and health care. Credit would become a public utility, directed democratically to build a better, more sustainable society, not to fuel private speculation. To ensure this system serves the people, we need democratic oversight. A digital monetary council with citizen participation could provide that accountability. Every citizen would have a no-fee CBDC account, ending a major barrier to financial inclusion. And we could even implement a social dividend, a regular payment to every citizen, distributed directly through their CBDC accounts, ensuring a basic level of economic security and shared prosperity. By reclaiming the power of credit, we can move from a system that breeds inequality and instability to one that fosters equality, stability, and collective prosperity for all. It's a bold vision, but it's one that puts people and the planet before profit. So, what does this new financial world look like? Let's call it a socialist modality focused on collective well-being. First, the power to create money is returned exclusively to the central bank. No more private banks conjuring money from debt for their own gain. Instead, this newly created public money flows through public credit institutions. These institutions wouldn't be driven by quarterly earnings or shareholder demands. Their sole mission would be to allocate credit based on the public interest. Imagine funding being directed towards green energy projects, affordable housing, public infrastructure, and small businesses, not just the most profitable ventures. The flow of money would serve society's needs, not a private ledger. Imagine a financial reset, a shift in power from private debt to public prosperity. This isn't science fiction. The technology is already here, and it's called a central bank digital currency, or CBDC. Think of it as a digital version of cash issued directly by the state's central bank. Because it's backed by the full faith and credit of the public, a CBDC is fundamentally stable. The risk of a bank run where everyone rushes to withdraw their money at once, causing the bank to collapse, vanishes. This simple change wrests the power of money creation from private institutions whose main goal is profit and puts it back into public hands. This isn't about top-down control, it's about democratic engagement. We could establish a digital monetary council, a transparent body where citizens have a say in our monetary policy. Every citizen would have a secure, no-fee CBDC account, ending the predatory practices of overdraft fees and minimum balances that penalize the poor. And what if we went a step further? A portion of the new money created could be distributed directly to every citizen as a social dividend. This isn't just a universal basic income. It's a direct share in the economic value we all create together. It's a dividend paid to you for being a shareholder in our society. This shift represents more than just a technical upgrade to our banking system. It's about reclaiming the power of credit for the people. It's about building an economy that prioritizes stability over speculation, equality over extraction, and shared prosperity over private profit. By moving from a fragile, debt-based system to one of public ownership and democratic control, we can finally build a financial foundation that works for everyone, ensuring a future of collective flourishing for all. The tools are here. The question is, are we ready to use them? What do you think about this future for finance? Is it a utopian dream or a practical path forward? Let me know your thoughts in the comments below. I'm really curious to hear your perspective. Thank you for joining me on this exploration of a different financial future. If these ideas resonate with you, please like this video, share it with others, and subscribe for more content on building a better world. I'd love to hear your thoughts in the comments below. See you next time.